Dear students, Assalamu alaikum. You are most welcome to my new lesson for the subject of accounting second paper. In the chapter 4, that is the name of capital of joint stock company. It is also called share issue of the company. This is the first lecture for this chapter. It is applicable for class 11 and 12 business studies students, and also for English version students. This is Mahmood Hussain, senior lecturer, Department of Accounting, English Medium Morning Shift, Rajkotra Model College, Dhaka. Dear students, I think you have taken your accounting learning workbook level 2 and opened the chapter 4, that is capital of joint stock company, and also taken your accounting practice copy for writing the necessary information from this lecture. Dear boys and girls, after starting this chapter, learners, that is, you will be able to have an idea about joint stock company, explain the characteristics, objectives and functions of joint stock company, have an idea about share issue and its classifications, able to make a difference between share, bond and debenture, able to keep record of issuing share at par, at premium, at discount. Okay, dear learners, now you can go to next slide for knowing the definition of joint stock company. In the slide you are watching the definition. The first one in ordinary sense, second one in financial sense. In ordinary sense, a joint stock company is a business entity which is owned by shareholders. Each shareholder owns the portion of the company in proportion to his or her ownership of the company's shares, that is, certificates of ownership. In financial sense, a company may be defined as a legal and invisible artificial person incorporated under an association of persons having an independent, separate legal entity along with perpetual succession and common sale, whose liability is ordinarily limited. The capital is divided into transferable shares held by shareholders in order to earn profit. Dear learners, you have to write this definition for joint stock company. I think you are writing very attentively from this slide. Okay, now we can go to the another definition for the next slide and next content. Definition of shares. In general sense, a unit of ownership interest in a corporation or financial asset. In financial markets, a share is a unit of account, various financial instruments including stock, ordinary or preferential, and investments in limited partnerships and real estate investment trust. The common feature of all these is equity participation limited in the case of preference shares. Another definition is available under the shares, that is the share issue. A corporation divides its capital into shares, which are offered for sale to raise capital, termed as issuing shares or share issue. Dear learners, the definition of shares and share issue you have to write in your accounting copy for your betterment, for knowing the definition of joint stock company, for knowing the definition of shares, for knowing the definition of share issue. Dear learners, the income received from shares is known as a dividend. A shareholder, also known as a stockholder, is a person who owns shares of a certain company or organizations. The process of purchasing and selling shares often involves going through a stockbroker as a middleman. Shares are valued according to various principles in different markets, but a basic premise is that a share is worth the price at which a transaction would be likely to occur were the shares to be sold. The liquidity of markets is a major consideration as to whether a share is able to be sold at any given time. An actual sale transaction of shares between buyer and seller is usually considered to provide the best prima facie market indicator as to the true value of shares at the particular time. In practical terms, shares are individual pieces representing an equal stake in the capital of a business organization. The number of shares make the respective holder eligible to receive a certain part of the profits made by that company. The shares also help the respective holders to be able to lay claim to a part of the worth of the specific company. Dividend, the earning that the holder of a share makes from his or her shares, is called the dividend. And earning amongst held shares is only possible by the company making a profit. Dividends are actually part of the profits of the company whose shares may be held by the respective holder. These are non-reinvested profit. Now you have to know about the debenture. A debenture is a document that either creates a debt or acknowledges it, and it is a debt without collateral. In corporate finance, the term is used for a medium to long-term debt instrument used by large companies to borrow money. In some countries, the term is used interchangeably with bond, loan, stock, or note. A debenture is thus like a certificate of loan or a loan bond, evidencing the fact that the country is liable to pay a specific amount with interest, and although the money raised by the debentures becomes a part of the company's capital structure, it does not become share capital. Senior debentures get paid before subordinate debentures, and there are varying rates of risk and payoff for these categories. Debentures are generally freely transferable by the debenture holder. Debenture holders have no right to vote in the company's general meetings of shareholders. but they may have separate meetings or votes on changes to the rights attached to the debentures. The interest paid to them is a charge against profit in the company's financial statement. The stock, also capital stock, of a corporation constitutes the equity stake of its owners. It represents the residual assets of the company that would be due to stockholders after discharge of all senior claims such as secured and unsecured debt. Stockholders' equity cannot be withdrawn from the company in a way that is intended to be detrimental to the company's creditors. The stock of a corporation is partitioned into shares, the total of which are stated at the time of business formation. Additional shares may subsequently be authorized by the existing shareholders and issued by the company. Dear students, now you have to know what is the difference between stock and shares. The stock of company is sold in units called shares. A share is a unit of ownership or equity in a company or a corporation. Shares are one of the most traded financial instruments. If you buy a share of company, you are buying a piece of company. When you own more than one share in a company or several companies, these are called stocks, because stock generally refers to a portfolio of shares. On the stock markets, shares are also referred to as equities. If you see the term equities trading, it is exactly the same as share trading. The person who buys share in a company is called a shareholder and has a claim on part of the corporation's assets and earnings. A stock is a share within a company. A company can separate their stock into lots of shares. If you purchase stock, you will have a very small percentage in ownership of the corresponding company. When these stocks are put into the business market, the price they are worth will either rise or fall. And now you have to know what is the difference between debenture and a share. A person having the debentures is called debenture holder, whereas a person holding the shares is called shareholder. Debenture holder is a creditor of the company and cannot take part in the management of the company, while a shareholder is the owner of the company. It is the basic distinction between a debenture and share. Dear boys and girls, I think you have heard very attentively. You are listening very, very carefully. Another one, debenture holders will get interest on debentures and will be paid in all circumstances. Whether there is profit or loss will not affect the payment of interest on debentures. Shareholders will get a portion of the profits called dividend, which is dependent on the profits of the company. It can be declared by the directors of the company out of profits only. Shares cannot be converted into debentures, whereas debentures can be converted into shares. Debentures will get priority is getting the money back as compared to shareholders in case of liquidation of the company. There is no restriction on issue of debentures at a discount, whereas share at discount can be issued only after observing certain legal formalities. Convertible debentures, which can be converted into shares at the option of debenture holder, can be issued, whereas shares convertible into debentures cannot be issued. There can be mortgage debentures, that is, assets of the company can be mortgaged in favor of debentures holders. but there can be no mortgage shares. Assets of the company cannot be mortgaged in favor of shareholders. Okay, dear boys and girls, all discussions are related to the difference between share, stock, and debenture. Dear students, now we can go to the next slide. For knowing journalizing of transactions relating to issue of share. Issue of shares. Totally 3 types of issue of shares: at par, that is equal value or par value of face value of share. Second one, at a premium, excess value of face value of share. Third one, at a discount, that is less value of face value of share. Now we can start for generalizing. Issued at par, and then issues share at a premium, then issues share at a discount. First, issues of shares at par. When application money received from interested buyer or shareholder, then the journal is bank account debit, share application account credit. Bank account debit, share application account credit. Second one, when share allotted to the share applicants, the journal is share application account debit, share capital account credit. Third one, when excess application money returned to the concerned applicants, then the journal is share application account debit, bank account credit. Or when share allotted to the share applicants and excess application money returned to the concerned applicants, that is number 2 and 3. If you want to record at a time, then the journal is share application account is debit, share capital account credit, bank account credit. The last one, that is the number 4, when paid for expenses of share issue, then the journal is concerned expenses of share issue or preliminary expenses or underwriter's commission account debit, bank account credit. Dear learners, I think you are writing in your copy. Okay, now we can go issues of shares at a premium. Journalizing entry. Number 1, when application money received from interested buyer or shareholder, then the journal is bank account debit, share application account credit. You are seeing the first journal is the same in all level: bank account debit, share application account credit. Number 2, when share allotted to the share applicants with premium, then the journal is share application account debit, share capital account credit, share premium account credit. Share application account debit, share capital account credit, share premium account credit. Number 3, when excess application money returned to the concerned applicants, the journal is share application account debit, bank account credit. Now, when share allotted to the share applicants and excess application money returned to the concerned applicants, or when you want to give the necessary journal for the number 2 and 3, this is the journal. This entry is to be share application account debit, share capital account credit, share premium account credit, bank account credit. Number 4, when paid for expense of share issue, that is the journal is expense of share issue debit or preliminary expenses debit or underwriter's commission account debit, bank account credit. I have already 2 types of journal for journalizing share issue, that is share at par and share at premium. Now issues of shares at a discount. Number 1, when application money received from interested buyer or shareholder, the journal is same one. The first one is same is all level: bank account debit, share application account credit. Number 2, when share allotted to the share applicants with discount, the journal is share application account debit, share discount account debit, share capital account credit. Number 3, when excess application money returned to the concerned applicants, the journal is share application account debit, bank account credit. Or when share allotted to the share applicants and excess application money returned to the concerned applicants. Or number 2 and 3, if you want to give at a time, then the journal is share application account debit, share discount account debit, share capital account credit, bank account credit. Number 4, when paid for expense of share issue, then the journal is expenses of share issue or preliminary expenses debit, underwriter's commission account debit, bank account credit. These are journals for share issuing for capital of joint stock company. Dear students, I think you have written in your copy all of journal. Dear learners, I think you have written in your accounting copy all of journal. If or not, then you can see in your accounting learning workbook level 2, page number 232 and 33. Total journals are available in these pages. For solving creative question or for solution of this chapter of all maths, you have to know the all journals. I think you have understood. Thanks for being today. Allah Hafiz. Assalamu alaikum wa rahmatullah.